Guys, I'm Eric Rapasardi. In this series of videos, we talk about accounting concepts. In this particular video, I want to talk about how to interpret financial results. First of all, just let me share my screen. From CityNet, I'll get you to click on the Technology One CIA icon. So when you go into Tech One, it'll default to your Home tab. I'll get you to click firstly on the Inquiries tab. And then in the bottom, in the middle of the screen, you'll see your Reports icon. Just click on that. And then I'll get you to click on the tile that's called Reports, Financial Reporting and Attributes. Now, in this window, there's a lot of information available to you, just to let you know. On the right-hand side, you get things like a cost center list, the whole divisional structure. That shows the divisions, the units, the sections, the teams, etc., and the cost centers, and things like a whole natural account listing, a project listing, etc. There's also other reports available here for other different types of use for different reasons, right? Now, then the left-hand side, this column here, there's many financial reports are available. Cost center, again, by project class, detail by division, etc., with commitments, reports by section, by teams, by unit, quarterly reports, etc., summary reports. So what we'll do in this particular exercise, I'm going to run the cost center report. So just click on cost center. So here's where we basically enter any variables, etc., like that. Now the year is 2022-23. Now it's in real time, so it's defaulted to May. What I'll get you to do, because it's a report, I'll get you to change that to the previous month. The previous month is completed, which means all the actuals, payroll and accruals are in there, okay? So understand that because our reporting runs on a monthly rollover. Then you enter the cost center. Now I'll enter 440, I'll wait a second and I'll come up and it'll self-validate. So click on the self-validation of the cost center and then top left, click run. So you'll get a message saying it's available under My Reports. So My Reports is a tile that's located in your Home tab. The report will always be there. So here we have it in the browser. There it is there. You can look at it in the browser if that's all you need to. You can scroll across or you can scroll down, okay? What I'll do to make it easier and have a big window, I'll download it into Excel. There it is and goes into Excel, okay. So here we have the report in Excel. So it's for cost center 440 and I've read it as at April. Now, this is in a classic accounting format with income at the top, and then you have all your expenditure below that, underneath that, and then basically you have the operating result. Let's go from the top down just to explain it to you. First is always income. So there's income, and there we have the natural accounts. Remember, income's natural accounts are always start with the 6 series, okay? Then under that, if you have internals, there's internal income and internal expenditure. So again, internal income and expenditure always has a 9 series natural account number. Then under that, we have the expenditure. Now, the top component of the expenditure, the top section, is all our salaries and wages, and other salaries and wages related. They're things like, besides the base salary, overtime, shift penalties, etc. We also have a lot of agency staff in there, and things like all our on costs in there, annual leave, miscellaneous, superannuation, workers' comp, and also things like the leave that we take, our sick leave, long service leave, annual leave taken. They're all salaries and wage related. We then have a subtotal of those salaries and wage related. Further down, we have all other operating costs. And they can range for all things like manner of things, stores and materials, catering, project costs, software donations, consultancy, surveys, etc., printing, office works. There's a whole range of natural accounts for the non-salary component. We then have a subtotal of the non-salary component. There we have some internal events cleaning expenditure again. Again, it's a 9 series natural account. We then have a total for total expenditure, which totals up the non-salary with the salary. And after that, we have the operating result. Now, because this is a typical accounting format, you'll see it's in credit. Why? Because there's hardly very little income in this particular cost center. It's predominantly a cost center, so it generates costs. Right? Is over 90% of the budget and actuals here are costs. So in the calculation, if you just click on any calculation there, you'll see basically it's income minus expenditure. That's why it's in credit. Okay, so there. Okay, let's go to the top now. Now moving across the top. I've read it for the month of April, but what happens is that the first 3 columns for April represents the budget for April, the actuals for April, and of course the variance for the month of April. The next 3 columns represents year to date. So these are the budget, the actual, and variance for the months July up till April. Okay. Furthermore, to the right, we have the full year. Full year, 3 columns here. So the first column is the current budget. That's your current budget for the full year. That never changed. There are a couple of exceptions, but basically that never changes. The next column is your full year forecast. This is when we update our forecasts on a monthly basis. We reflect them here because remember, the actual forecast change that we update is always to reflect what we believe we will spend for the full 12 months of the year. And the variance is basically comparing our current budget, current full year budget, to the current full year forecast. And as you can see, as we scroll down, the forecast has changed in many line items, and we have a variance. Okay, so guys, that's to explain that. Now, basically, how do we explain the variances? Now, the first thing we note is that, look, variances, they can be in either red or they're not in red. Please ignore the fact that they are in red. Red means that that variance value is more than 10% of the actual budget. Okay, so that's not as crucial. What is crucial is if the variance is either positive or a negative number. And as you can see, we have many positives and we have a few negative numbers here. Okay, that's the crucial thing. Now, I'll click on this variance here just to see the formula. So the formula in this case, now this is income. So income is money coming in. So the formula in this case here is your actuals minus your budget. So in this case here, the actuals is less than the budget. So that's an unfavorable variance of 2,997. The next number, again, is actuals minus the budget. But the reason that the budget is 0 and the actuals minus the budget means it's a positive variance. So that's a favorable variance, okay? Now, when we get down to expenses, the actual formula reverses because remember, expenses is basically money going out. So it is budget minus the actual. So there we have it, $419 example there, right? So again, ignore the fact that it's in red. Just know that if it's a positive number, it's favorable. If it's a negative number, and negative means it's in brackets. It's unfavorable, and that applies whether it's to the month or year to date. Okay, and also to the forecast and budget variance, it's positive or negative. Now, again, I'll scroll further down because it's in accounting format and it's a negative. So this basically is a cost center. So if we interpret this line here, we're saying that as at April, the budget for this cost center is a negative 14.9 million. The actual what they've incurred is a negative 12.9 million. So they're actually $2 million under their budget, and that's a favorable result. And what they've done in the forecast, they're saying, okay, by the end of the year, we expect to be a favorable result of 300 and almost 389,000. Guys, again, you should have a thorough understanding of your drivers, of your actuals, and you should be totally across your financials where they are and where you believe the forecast will be by the end of the year. Okay, guys, essentially that is it. By all means, if you need any explanation, you can contact myself or contact your finance business partner. Okay, thank you, guys.